very familiar story.
I
And
never used the credit card because I was like, it didn't sound right. I come from Jamaican background, and I'm like, well, I really don't know what to do with this, and there's no way someone's going to get me caught doing something I shouldn't. So I kind of felt like they were trying to catch me doing something. So I was like, yeah, no, I have money in the bank. I'm going to keep my money in the bank. And
so you slipped through the loop, you slipped through the cracks because what
yeah,
they were trying to catch you, absolutely, and charge you that
they were,
20%.
yeah.
Right. Okay. So I'm just looking at some of the comments. So we got, yes, learned along the way, trial and error, learned about credit on the way as I got older, and unfortunately learned a little too late, but it's never too late. Credit you can always redeem yourself from in.
Always.
I learned along the way. Yes, it will be recorded. Thank you, Sabrina. Biggest thing I learned since getting into real estate investing. Credit, okay. As a first generation Canadian, I was told don't trust anything. I started working for a bank, which helped me learn. Yes. And it's so funny that even in the bank, they don't really teach you about credit. They just teach you what they want you to look for, right? So I'm glad that helped you, Suzanne. Yes, it's being recorded. How to maintain your score. I will touch on that. Trial and error, cleaning up my credit now. Awesome. Glad to hear. Again, you being here speaks volumes to that because, again, there's no one really having a conversation. And my conversation is still probably not the typical conversation that's out there because it's more than just managing your credit. You got to really understand the real purpose of it. And here we are, the purpose of credit. So the use of credit is based on the assumption that our future resources are going to be far greater than our present resources. What does that really mean? When you borrow money, it should be used to grow your personal assets or put you in a position to grow your business so that you can then grow and help hire people and spread the wealth. And so again, it's two-sided story. People think, you get credit. Yes, you got to build your credit to use it for X, Y, Z. But yes, you got to do that. But what are you using the money for? Right? So purchasing vacations that when you don't have the money, purchasing, clothing when you don't have the money, that doesn't fall under the true purpose of credit. And this is no judgment to anybody who uses that because this is just the world that we're in. But again, without that education, when they gave us the credit, they never told us that this is what we're supposed to use, right? We're supposed to use OPP to get ourselves to advance ourselves, with OPP being, other people's money. So making sure that we're investing in things like real estate, where we know that if we put money in it, borrowing it in a mortgage, we are paying a cost to borrow it, but what you borrow it for versus what the appreciation and the value and what you get in return far outweighs the cost of that investment. And so that's the true purpose of credit. So a question for you: are you using credit to build wealth? Hypothetically, I don't want anybody to answer, but I can do some comments. Lots of comments. Hold on. I never got a credit card because I always heard that credit card would put you in debt, and I didn't want to go into debt, so I did nothing, not realizing nothing is also bad credit. Yes. You gotta. It depends on what your plan is, but yes, people don't, and they equate having no debt as having good credit. But then when you go to apply for credit, and there's nothing for them to assess you on, it works against you. Suzanne says, I was doing well on my own, but when I got married, it went downhill. I'm looking to rebuild now. Awesome. Well, you're at the right place, Suzanne. Sabrina, trying to change the narrative by letting folks in the community know about seminars like this one and teaching my family and friends what I know. While it's important for us to know, it's also important for us to share the knowledge. Absolutely. I think I heard a quote just yesterday, Maya Angelou, when you learn, you teach, right? Don't keep it to yourself. And so Statistics Canada reported that credit market debt totaled, are you ready for this number? $2.33 trillion at the end of 2019. This is when it says credit card, we're talking about the Visas and the MasterCards, not mortgages. And so of that 2.3, 1.53 of that is mortgage debt, right? And so the mortgage debt, again, I explained to you earlier that, when you're investing in real estate, you're borrowing the money so that you can make money. But when you're borrowing money from credit cards, and doing consumer shopping, you're not making any money, right? And so this is why the Canadians are in so much debt. And the households, they say the average Canadian, for every $1.71 of their disposable income, for every dollar they earn, they owe $1.71, which means they're overextending. All right. And so this is where the education part of credit is very important to me, is because people are using credit or have been forced to use credit as an extension of their income, because what? Everything else is increased except for income, right? And so, rent is expensive, groceries are expensive, childcare is expensive. And I understand, I totally get it. And the banks are throwing out the credit, especially when you make your payments. They'd be like, here, you've been approved for an increase. So if you know what you know, when you know what you know, then you can make the better choices. And so what is credit? Credit is comprised of three different things: your credit history, which tracks the way you've handled your credit in the past and at present. It comprises of your credit score, which is data that is inputted in an algorithm that pops out a score that predicts how you're going to behave in the future based on your past and present relationship and activity. And then lastly, your credit report, which is all of it, the information in there. And so I like to refer to your credit history as your adult report card, and your score is like your grade, right? So it's like we're going back to school. And so I want to address some of the myths that are out there. Hold on, I think there's a comment. Yeah, communities definitely need to know about this. You're absolutely right. And so some of the myths that I've heard in my years is, one, you need to carry a credit balance to build credit. You don't necessarily need to carry a balance, but you definitely need to use your credit to build your credit, right? Because when you are carrying a balance month to month and making those minimum payments, what you're doing is, yes, you're maintaining your credit. However, you're paying more to interest than you are to paying it off, paying down the debt. All credit reports and credit scores are the same. They're not. In Canada, we have two credit reporting agencies. We have TransUnion and we have Equifax. And for some reason, their scores are never the same. That reason is typically because they are computer systems and they read the information differently. One keeps the information longer than the other. Sometimes an account that you may have, let's say you have a car loan, they may be only reporting to one agency versus the other. So there's many different variables in what would cause your credit score to be different, but typically the information is not the same. Checking your credit will affect my score. And so that there's a twofold to this myth. It can, if you are a credit shopper. And so what is a credit shopper? Someone who is just looking for credit everywhere they go. Like, for example, if they're going for a car is usually the easiest one to talk about. They're looking for a car, but they're looking for the best deal. And they go to the Honda dealer, they go to the Mercedes Benz if you like luxury. And every time you go and put in an application, that institution is going to have to pull your credit. So that's considered a hard credit. Versus, even if you come to me to pull your mortgage, to do your mortgage, I will be pulling a hard credit pull, but I will only pull that the one time, and any person that pulls it after me within a 3-week window would be considered a soft pull. What is a soft pull? It's a pull that is not going to affect your score. And so if you pull it yourself, that's considered a soft score. And again, if you are pulling it after your first mortgage application within a 3-week window, the subsequent ones in that 3 weeks would be also considered a soft pull. Having no credit is good credit. Abina shared that. When you're looking for things like a mortgage, you will need to have some form of credit history to be able to leverage the best products and interest rates available, because they want to see how you've managed and what your relationship is with debt, right? If you're asking for, $500,000, $500,000 worth of mortgage money, but you don't have any type of credit history, it's risky. It's essentially, they see you as a risk. So you want to have some form of established credit. before you're applying for anything. Paying off or settling derogatory debt trades removes it. It doesn't. If so, let's say you've gone through, a life situation and, your credit has been at the brunt of that, and you've got, some negative reportings on there, but you've settled it, you've paid it up. It doesn't remove it, but what it should do is update it, and it will remain there for at least 6 years to 7 years of the last date of activity. So if you pay it in, March 2021, 6 years from March 2021, which would be March 2027, is when it will actually remove itself. All right. And there's nothing you can do to get it removed unless it's been put there incorrectly, and then the company would have to remove it. Bankruptcy permanent.
Sorry, Siobhan, I think that might have answered the comment and question in the chat, if you can look at that. If you have missed or late payments on your credit report from 2017 and have since then made your payments on time, how long will it remain as derogatory on your credit report? I think that answers that.
Yes. So late payments, even though you've maintained yourself since then, it'll show beneath all of your good reading. It'll show that in March of 2017, you did make one late payment. And so that just shows the lenders that, there was an incident at that time, but as long as you've redeemed yourself for the last 2 to 3 years, you'll be good. That's fine. It seems like, yes. Okay. So that's the next thing. So bankruptcy permanently ruins your credit. It doesn't permanently ruin your credit. It does impact your credit for 7 years. But there is life after bankruptcy. So I know I get a lot of people who feel defeated because, the whole bankruptcy process, I can understand can take an emotional toll on you, but we have to understand that life happens, right? And there are other priorities than credit when life happens. And so if you do find yourself in that situation, just know that, you can redeem yourself. With respect to mortgages, you can also get a mortgage after you filed bankruptcy, and I'll touch on that a little bit later. Lastly, consumer proposal is better than bankruptcy. So in the technical terms, they are different, right? Because you know that bankruptcy is wiping out all of your debt if you qualify. And a consumer proposal is where you've now enlisted a third-party agency to negotiate for you on your behalf to bring down the amount of debt that you owe, and then you pay a lesser amount. So in that respect, they are different, but with respect to a mortgage, they kind of are the same. So you'll want to ensure no traditional lender will lend to you if you are just recently bankrupt or if you're in a consumer proposal. They will have to have been completed before they'll want to extend to you.
And is it fair to say, Siobhan, that it's usually that 2-year window after discharge, right? That you could then be somewhat redeemed despite the 7-year window. Mm-hmm. The lenders will likely, especially if you've rebuilt your credit.
Right, you'll definitely have to, and I'll touch on that a little bit later.
Okay, sorry.
Awesome.
There's still some other comments and questions in the chat.
All right. Andrew says, so will paid in full derogatory payment last impact you getting a mortgage? It will be looked on, and we will have to give an explanation, Andrea, and it would definitely have to be updated, right? So even if you paid it, if you had known that you paid it and you're applying for this mortgage now and it's not reflected as paid, we will have to provide proof that it's been paid. So either way, it has to be paid, and we have to provide an explanation. I hope that answers. Another one? You're welcome. All right. So why do we need good credit? For things like buying a house, right? With Keen Real Estate Group. You definitely want to, and let me just give you this disclaimer. You don't necessarily just have to have good credit. There's, as I said, with working with a broker, you have multiple options with respect to getting financing, but to get the most I guess I don't like to use the word cheap, but the cheapest money out there available to you, the better the credit, the better your rates, meaning that's the least amount of interest that you can pay when you're purchasing.
And Siobhan, not just rates, right? It is terms as well of the mortgage.
Yeah, like conditions and offers that they'll make to you.
Like a lot of everything goes better when you have better credit.
Absolutely. Absolutely. Well, yeah, well, the better your credit, the you have access to the A tier type lenders, right? Investing. There's, outside of real estate investing, I know there's companies that will check your credit when you are looking to invest your money elsewhere. Employment and promotion. I know a lot of employers are pulling credit now to see, what your relationship is with your credit. If you're starting a business, you may need to have good credit. Building your business credit, you definitely want to have good credit, because until you establish yourself, they're going to be looking at your personal credit before they extend business credit to you. Student loans. I know when I was going to school, they didn't really care, but now I know that they do check your credit prior, and that could affect how much you get with respect to a student loan. Buying or leasing a car, cell phone, they're pulling your credit too. Auto or home insurance, also, they also look at your credit. And so, of course, renting an apartment or house, which has also become very challenging, I know, in these times as well. But landlords want to see what your credit looks like before they offer you their place to rent. So there's definitely a need to do your best to maintain good credit. But again, I understand that life does happen, but we can put in work. So what is defined as good credit? And so this is a scale. There's various scales out there, but I thought this was a good one to give you a good marker. And somebody asked earlier with respect to mortgages. Right now, the A-type lenders are looking for 680 and above. Mm-hmm. Not to say that if it's less, you cannot get a mortgage. It just makes it a little bit more difficult, and you kind of have to come stronger in all other areas, because there's many factors, which I'll go into the next slide, that can impact your score. And it could be like a short-term fix that you need to fix in order to bump it up. But 680 is kind of the magic number right now. In Canada, our credit score ranges anywhere between 3 and 900. I personally have never seen a 300, nor have I seen a 900. Yeah. I think the highest I've seen was 888. And that was I was like blown off my chair. But on average, I would say 620 to 720 is where I usually see most clients that are ready to purchase. But wherever you are, you can always do a few little things that I'll share later too to help improve your score. Now, what is your score made up of? And so this is the thing that I want you to pay attention the most, right? So you'll see that your payment history, 35% of your score, 35% of that score is based on your payment history. How are you paying your debt? Are you making that minimum payment every 30 days on time? At least the minimum payment, right? Have you made a late payment? Yes, that happens sometimes, but that's where the bulk of your credit score is based off of. How much debt are you carrying? So your utilization, that's 30%, which is also very high. And so what utilization means is that if you have, $10,000 of worth of credit that was issued to you, you want to keep the balance no more than $3,000. Right? Most times that doesn't happen, but if you're ready to apply for a mortgage, that's what you'll want to do. You want to bring down your balances to ensure that you're at that 30%, or even 50% is kind of like a fair number, but 30% is the sweet spot. Credit history. So the longer you've had credit, the more established you are, the better. As I said, my first credit card was when I was 19 years old. So if you still have your card from school, which most people don't, but if you do, keep it. Even if you're not using it, keep it, because the longer the history, the better overall it helps your score. Pursuit for new credit. So this goes back to when I mentioned about credit shoppers. So if you're looking for a car, or if you're looking for a TV, or anything that you're applying for credit, you want to minimize that as best as possible. Not to say that you can't, but just don't do it frequently. Just do it for when you need it, right? And then the types of credit. I encourage all of my clients to avoid those these store cards. For one, interest rate is ridiculous. But two, lenders prefer to see major credit cards, i.e. Visa, MasterCard. All right.
Also, Shimon, the 30% is on each card balance or each type of credit. So you could split it across 2 or 3 cards rather than one card to have that 30%.
Tricks to help you bring down your utilization. Yes.
Yeah.
And so this is my compassionate part of me, and I just want you to know, because we've all fallen into the system of figuring it out on our own. Because I know the first question that most people say is what's my credit score, or my credit score is this. I want you to know that your credit score does not define you. If, as I said, life happens, and if you found yourself rebuilding yourself, and your credit score is not the 680, the magic number, that's okay. Because in truth, your credit score is just another way of saying to the lenders, give me more debt. Right? Your credit is really about them than it is about you. Your credit score is an assessment of your relationship with that. And so again, as I said, life happens, and as a result of that, your credit can sometimes be negatively impacted. But just know that with patience and some commitment, that your credit can be restored. Because the truth is, if you had no debt and you're at peace with your finances, your credit score really wouldn't matter. Right? And so this is my fun part. This is the part where, most people be like, what is that? And so this is the secret that the bank doesn't want you to know. This is called the Rule of 72. And just a drop in the comments, is there anyone here who knows what the Rule of 72 is, or has heard about what the Rule of 72 is? What is considered a low interest rate for a credit card? I've seen as low as 11.99 for a major credit card.
I've seen lower. I've seen as low as 5%.
Oh, yeah, as an introductory rate?
No, as now it would change over time, but my husband had a Capital, not Capital, I think it's Capital One that he had for a long time at that rate. Okay. So they do have, and they'll also give you discounted rates based on credit. I can cheat a little bit. I do know the Rule of 72, but I know that most people don't. Because I come with a financial services background.
It's not for you. Okay, so
I won't answer. Absolutely not. They have to, but I love the picture. Look at it. Mad scientist. Einstein.
According to the Rule of 72 credit card, companies double their return on your credit in 3.5 years. If it takes you 4 years to pay off, you have bought the item twice. All right, Candace with the Google. Some
of us are just brilliant.
Yes, thank you. Kalisa, is that I'm saying that right? Heard about it, yes. Candace also asked how long your investment takes to double on your return. Exactly, right? Yeah. So the Rule of 72 is an estimate of the number of years it takes for your money to double. And so if we think about, you have $10,000 and you put it in a bank investment, and I'll just call it out and call it a GIC.
Absolutely.
Because that's what they encourage you to do first, right? Save your money in a GIC and for 5 years, and we'll give you 3%.
Absolutely not. It's less than that.
If you're lucky. I was just trying to be nice. So I was just trying to be
nice.
I don't want to look like a bad guy. But what happens is they'll take that, you'll give them that $10,000, and they take that $10,000 and lend it back to you on a credit card for 19%, 19.99%. Right? So they've mastered the Rule of 72, and they're not telling you this, right? So it's, yes, the number of years, and hold on, let me read the quote. Albert Einstein says, the compound interest is the 8th wonder of the world. He who understands it, earns it. He who understands it, earns it, aka the banks. He who doesn't, pays it. Canadians. Right? And so in my example, it shows you exactly here. So yes, if you have, using that $10,000, if you have it and invested in a GIC, it would take 36 years for that $10,000 to become $20,000. Did you guys hear that? 36 years, right? And that's at 2%, because that's probably what they're giving.
How many 36 years do you have, peeps?
I just barely skipped one. Like I'm done. Like, so I don't have that.
You don't have enough.
Right? So there's multiple ways that you can invest your money. of course, we want you to invest in real estate. Hello, with Keen Real Estate Group. But yeah, if you invested in a vehicle that's going to yield you, let's even say 8 years, right? You buy a property, you keep it for 5, 6, 7 years, 9 years. It'll take 9 years for that $10,000 to double to $20,000. So which is better, 9 or 36?
I choose A. Nine.
Decisions, right? So yes, and this is where it gives us the control. Now that we know what the banks are doing with their money, then we got to use wisdom and apply the principle to ourselves. And so how do I want you to take control of your money? You got to make a plan. If you do have debt, got to eliminate the debt as best and as fast you can. And so how do you do so? Stop creating more consumer debt. And I know that sounds like a big ask for some households, but now that you know that, it's holding you back in developing a plan of creating that generational wealth. You can have some debt, but as long as it's manageable and that you have a plan to pay it off, right? I mean, there are people who are carrying debt for years, like that same $10,000 of that line of credit for years, because they're paying it and then using it and then paying it and still carrying that balance. So stop creating more consumer debt is the first thing. You want to review your budget and set a debt freedom date that is realistic and affordable and is also in alignment with your financial goals. Decide which debts to pay off first, such as high interest rates. So there's two methods that you can pay out there that I'm familiar with. You have the avalanche method or the snowball method, snowball effect. Has anyone heard of these? I know Candace may have. Not picking on you, Candace. I just love it. So the avalanche method is did you answer?
Oh, she's right. So someone said Dave Ramsey. I agree. Great. Dave Ramsey's good.
Yes. So the avalanche method is where if you have 5 credit cards, you would, out of the 5 credit cards, you would find out which one has or charges you the most in interest. And so that would be your target to pay that one off first. So you start off with the highest interest while you're maintaining your minimum payments, all of that. Any extra monies that you have, let's say your minimum payment on that debt is $200. If you have an extra $50, pay $250 on that until you pay it off. And then you roll over that $250 onto the next credit card debt that you had that's paying the most interest, charging the most interest, and so forth and so forth. The snowball effect is the reverse. And I like the snowball effect more. That's why you see the asterisk there, because we're emotional beings. Most of us who have credit debt and are carrying credit debt, we've done a lot of emotional shopping with it, for the most part. And so, just like with goal setting in life, you have a goal to make X amount of money or save X amount of money or lose a certain amount of weight. And when you hit that milestone, you feel accomplished. So with the snowball effect, it kind of taps into your psyche. And so if you have the same 5 debts, the smallest one is where you're going to tackle it first. So if your smallest debt is $500, you're maintaining the minimum payments on all the debts. But again, with that same extra $50, you're going to add it to the smallest debt until that's paid off. And then the amount that you were paying on that small debt, you're going to roll it to the next highest debt. So now you have 4 debts to pay off. So it happens a lot quicker and you feel a lot more proud of yourself, and it'll help you to keep going. All right. Work with your creditors to help reduce your debts. Contact your company to request lower rates. And so, Andrew, you just touched on that, right? Many people don't know that you kind of have control. Well, not control, but you kind of have say, right? But if you don't say anything, then, you're going to lose out. So yes, you can call your credit card companies and negotiate with them and try to get a lower rate. And I learned that from, I try to say her name all the time, Gail Vazoxley.
Oh yes, she had a television program for
a television show. That's where I learned. I was like, oh wow, I didn't know that. Okay.
And Siobhan, right now is a great time to negotiate. There's definitely a lot of heartstrings that you can pull because of COVID.
Absolutely.
You have a lot of leverage with asking for forgiveness, yes, and our needs to be met.
Right? That's right. And that even goes with mortgages. If anybody is here that owns a home already, it's always a good idea to reassess your current situation and see, because rates are, although they have increased over the last couple of weeks, but they're still like rock bottom, like history low rates. Candace says, I love budgeting and killing debt. I teach a budgeting course. Oh, okay. That's
Awesome.
why. But we
Thank
don't
you for
cover the
sharing that,
details of
Candace.
credit. So this is awesome. You're welcome, Candace. All right. So going forward, number 5, seek counsel from a financial coach. You know when now to start making your money work for you, right? So if you know where your money's going, what's coming in, what's going out, what you can assess, what you can eliminate, what you can adjust, right? And then you reposition your money and start making it work for you. Number 6, I love this one. Make more money. There's many ways that you can do that. If you are an employee, ask for a raise. You probably haven't gotten one in a long time, especially now, but ask for it anyways, right? Or you can find alternative work by a part-time job. But my favorite is utilizing your gifts and your talents and leverage the internet. We are in an online world. Like, hello, we're on Zoom, right? Start a home-based business. There's something that you can do and find your space online and market it and make some extra money. And then lastly, be committed. This is your process. Rome wasn't built in one day. So, whatever your situation is, there's no rush. As long as you have a plan, you work the plan, you will get to where you're trying to go, as long as you're committed. All right. And so with respect to your credit, you can't fix anything if you don't know where you stand. And so I encourage my clients to check their credit regularly. There's many ways that you can do so. As I mentioned earlier, we have 2 credit reporting agencies. We have Equifax and TransUnion. I, as a mortgage broker, we typically we have to use Equifax first, but lenders do reserve the right to also pull your TransUnion report. And so you can contact each of these institutions directly, and you can get a free report every year at no cost to you. And yeah, you want to make sure that you're staying on top of it and checking it. But there's also other companies that provide the same information online instantaneously, free of cost. And also it's going to be considered a soft hit. So you're not going to be impacted when you use these companies. Borrowell is the one that I use the most because it pulls the information from Equifax. Credit Karma pulls the information from TransUnion. And there's also Mogul that I believe pulls it from Equifax. Now, what I will say is that it's really just to give you a sense of what's happening with your credit. Typically, the score that they give you may not be 100% accurate because what you pull on Borrowell, and if you go to Equifax, it could be different. If I pulled it, it could be different. And that's because these companies, they don't get on-time information. Their information is a little bit reported dated. So, but it's very good to keep track because, as I said, we're in an online world now. And so things can happen. So you want to make sure that there's no funny business happening to your credit. Nicole, I try to check my credit score often through Scotiabank. They have TransUnion linked to the app so I can instantly access it. That's great. Yes, a lot of the banks that are pulling their own credit too. The bank system are also different. So if I pull your credit and then you go to the bank, chances are the scores are going to be different as well. They have internal scoring system. Amanda says, what's considered a high interest rate for a credit card? Yeah, Portia says 19 to 24. Yes, that I would say that's about right. Portia, thank you. So what is a more accurate score? What do you mean by accurate? What do you mean by accurate?
I think the accurate score will come from what the lender wants, right? And you've already set a score of, as low as 680 is a good score.
Right.
And I don't think that those scores are inaccurate, just as you said, Siobhan. I just find that some of them are delayed in updates. Mm-hmm. And that's why we see the differences in our scores from the Borrowell to the lender, mm-hmm. and to, the TransUnion or Equifax.
Right. So you can also go directly to the source, directly to Equifax or TransUnion.
Yes. And to have no cost to you, Siobhan, am I correct? It's best if you request it in the mail?
Yes, from Equifax or TransUnion. Yes, that's what they do. You send it in the mail and it's free.
Otherwise, online, there's a charge to do it online outside of Borrowell or Credit Karma. If you request it online, that's usually at 25, somewhere with around $23 to $25.
Yeah. All right. You're welcome. Abina says, I have to go, but one question before I do. What do you think about investing one's money in a financial institution where you become the lender and receive anywhere between from 6 to 10% back on your investment while saving towards homeownership? Yeah, that's exactly what you want to do. You want to invest your money in an account that is going to give you more than 1% that you would get in your savings account, for sure. Amy says, does your credit follow you into the US if you move? No. If so, how? If not, do you have to start fresh? You definitely have to start fresh. Just as if you were in the States and coming here, you would have to start fresh as well. Well, if we needed to, we can pull your Equifax report in the States. We just can't, it's not going to report. It's not going to merge because you're going to have to get a SIN number here. And over there, I think you have a social security number. You're welcome, Abina. You can always reach out to me if you have any other questions. And so I think we're...
But Siobhan, just so that people, I think if we could understand a little, there are some of our banking institutions that are abroad. I know that they're not the same when they're in the US or in the Caribbean, but is it possible to carry or use, the history that we've acquired here and carry some of it anywhere in the world or somewhere else in the world?
It wouldn't report on, it wouldn't merge.
No, it doesn't report, but like if I move from house to house, sometimes they allow me, like a gas company or any type of large company, they will use my history from another company or from my previous residency to help. I'm just wondering, can we use that, do you think, and in any way?
Yeah, for us, if, for example, if somebody's new to Canada and they're coming from the US, we can pull, or the lender will pull their American bureau and review it as, coupled with other things here.
Yes. So that it's not that you've wasted all your years in another country.
No.
Yes.
But
it's just not, they can't pull.
Carry it over. No, you can't carry it over though. Hold on, there's a couple more questions. Okay, I'll get back to you, Anne. Let me just continue because that was a direct question.
So you're leaving the self-employed question for after?
Pardon?
No, I just see a question for how do self-employed people qualify for mortgages? Sometimes a lender doesn't favor self-employed individuals.
So it's not impossible. And I think I touched on that on the next slide as well. Okay. Self-employed income, because it's not guaranteed, it's not predictable. They ask for a lot more security from you. For one, they have a higher expectation with your credit, and also we have to provide a lot more documentation to show where your income is coming from. So your proof of your business bank statements, in some cases your personal bank statements, your T1 generals, your proof of business, contracts, invoices, so everything that can show the lender exactly where your money's coming from and how much it's coming. So tips, let me go back, sorry. So tips for keeping your credit in good standing: pay your bills on time. And when I say on time, I mean like a few days before the due date. You want to give yourself a grace period. The minimum payment at best. If you can pay more, of course, saving yourself some interest, pay more, including your cell phones. People don't realize that your cell phones are reporting to your credit on a monthly basis. And so when your bill is $150, you're not required to pay, the minimum payment of $125. That entire thing is due. So pay your cell phone bills on time. Get all the derogatory, incorrect information removed. Right? So this is about the monitoring and making sure that everything is accurate. Using only a small portion of your credit limits. And so as I mentioned earlier, 30% is the magic number, but up to 50%, is okay. If you're trying to rebuild, get yourself a secured card. Most major institutions won't offer that. Capital One is like the number one card right now for secured cards. There's other institutions that offer it as well. Like we have one through our broker channel as well. Get a credit builder or loan or secured loan. Sometimes, it's easier to get a car loan than it is to get an unsecured loan. So getting a car loan, or, there's some companies that will give you small short-term loans, and that'll help you to build your credit. Become an authorized user on somebody's account. And so 6 and 7 kind of contradict each other, but if you're trying to build and you have somebody that would do you that gracious favor and add you to a new account, that'll help to build your credit. The last one, number 6.
And Siobhan, they don't even have to use the card, just being on there.
As long as the card is being used.
Yes.
As long as the card is being used, yes. And then I also say avoid cosigning where possible. If that's you and you're trying to get a home, you want to not do a cosigning, because what happens is if you cosign a car for, let's say, your child or, your sister, even though you're not making those monthly payments, all of those liabilities that you've co-signed for are now going to impact your mortgage application, right? And then the other thing is, what happens if something happens to them and they're unable to pay? That is going to affect your credit, right? And then lastly, which should be number 8, is apply for credit only when you need it. Only when you need it. So even if you go to the bank and they say, hey, you've been, approved for an increase of $10,000, if you really don't need it, you don't need to accept it. All right. And so we're very close to the end. And so with respect to the mortgage, I touched on some of this earlier. You want to try to have, again, aim for a beacon score, credit score of 680 and above. And that opens your door to all of the best opportunities with respect to mortgage lending. You got to have a minimum of 2 years. 3 years is better of established history. And what does established history look like? You have at minimum 2 active credit cards, or credit card and personal loan, car loan and credit card, line of credit and credit card. You got to have 2 active trades with a minimum of $3,000 to $5,000 of available credit. And you've made those payments. You're managing the debt. You're not over your limits. You're not maxed out. That's what the lenders are looking for, right? They want to know that you're not living off of your credit and also asking for a mortgage loan. Bankruptcy and consumer proposal, as I mentioned earlier, with respect to a mortgage, they are looked at equally, even though they're technically different. What has to happen? You must be discharged from both of them. You got to have at least 2 years of reestablished credit. And with post-bankruptcy or consumer proposal, the expectation is stellar. There's no room for hiccups. Otherwise, you will have to look at alternative lending. The minimum down payment requirement would be 10% with traditional lenders. But with non-traditional lenders, you can get a mortgage the day that you get discharged. You can get a mortgage, but you will have to have a minimum of 20% of a down payment. I see some questions. Oh, I see a lot of private questions. Okay, 1 second. Okay, so I was asked, do I need to have a high credit limit to have a great score, or even $1,000 credit limit is good so long as I pay? Yeah, absolutely. Anything that you have. But if you're looking for a mortgage, you'll need to have a higher credit limit. To that person that asked me the question. So yes, whatever credit amount that you've been extended, you can practice all these practices, and that'll help to build your score. It doesn't matter the amount of credit, but it does matter on how you use it. Amanda says, I'm happy I tuned into this workshop. Knowledge is power. Thank you, Amanda. Could you please clarify number 6, please? How does an authorized user build your own credit file? So an authorized user, meaning so Kemba is applying for a card and I'm her daughter. Okay, not really Kemba. I'm just using it as an example, okay? Because I got some years on me, So Kemba is trying to help me establish my credit. She's going to apply for a card, and on that application, I'm added to it, which means that the credit card company is going to approve the card because Kemba's got stellar credit, and they're going to issue 2 credit cards, one in Kemba's name and one in mine, and it's going to report on both of our credit bureaus. If Kemba was going to just say, add me to an existing card that she had to give me access, that wouldn't build my credit because it's just reporting on her report. It has to be authorized as in we both apply at the same time and 2 cards are issued as that account is being opened. I hope that helps. Next question, cosigning gets people into a lot of trouble. I agree. But there's, again, if there's favor upon your life and you need the help, you might have to ask somebody to help you.
And just to say, like, if somebody's helping you out, just be careful with it,
Absolutely. Respectful of it. Yes.
Respectful of it.
That's a big deal. That's a very big deal. You may have touched on this. I have a lot of available credit used. How does it good against debt service ratios? I heard credit lines versus credit cards are weighted differently. Let me read that again. How does it? You have a lot of available credit. If you have it available and there's, like, as in you're not carrying high balances, that helps with your utilization, right? So that's the whole objective. You have whatever your credit availability is, keeping your balances low. With respect to credit lines and credit cards weighted differently, they are weighted differently in the application process, whereas they're much more difficult to get a credit line versus a credit card. But with respect to reporting on your, and with respect to cost, let me go back with cost, credit lines are cheaper than credit cards, or can be cheaper. But in terms of reporting on your credit bureau, it's the same process. It's how much you use, how frequently you're paying it, and how old the account is. What credit limit is needed when I would like to apply for a mortgage? At minimum, $3,000, but $5,000. Right here on this slide, $3,000 to $5,000 is with 2 active trades. So it can be $2,000 and $3,000, or $2,500 and $25,000, $4,000 and $1,000, but about $5,000 is good. It's not called an authorized user. Banks don't do co-borrowing anymore. Okay. I'm not sure about that, but okay. Thank you for that update. All right, so we're at the end. This has been fun. Hold on, I see another question. Love this info session. Very, very helpful. Thanks so much. You're very welcome, Nicole. Thank you. And so as my gift to you for taking out the time to spend with us, what time is it? Oh, we're good on a little overtime. I'm offering a 30-minute credit consultation where you can just go to this link and fill out the form. I do ask that you have your own copy of your credit bureau. And if you're looking for tips on how to build or rebuild, I can have that conversation with you and give you some tips on what you need to do. Or if you just simply have some questions, you can always reach out to me. I'll go back to that. But before I do that, I want to leave you with this quote. Building wealth is a marathon, not a sprint. But financial discipline is the key ingredient. And so managing your money, understanding your money, making it work for you is going to be, again, your most valuable asset in building wealth for your family's generation to come. And so thank you once again for taking the time. There's my information. Feel free to call, text, or message me on social media. I am on all platforms. And thank you again to Kemba and Andrea for having me speak to your audience.
Yeah, no, that's awesome. Thank you very much for joining us and sharing all of this amazing knowledge. I can see from the questioning and the response in the chat that everyone is very, they feel very enlightened. And I do still see one more, but it sounds like the any budgeting tips. I think you're going to be able to give that through that one-on-one consultation as well, right?
Yes. Okay.
So please use the opportunity, to speak with and reach out to Siobhan and or ourselves. Kemba will bring up our info shortly. So that we didn't just do it just to share the information alone. We're hoping that if you need more than just tonight, that you'll connect with us so that we can help provide you the support that you may need. Because it's very critical that you have the right credit to allow for the things that you want to accomplish. So please take the time to connect with us. And if you missed something tonight, or someone that you know that wanted to make it and wanted this information, when we do share the link, the replay with you, please use it to share with those individuals so that they too can receive the information. So, sorry, Siobhan, did you have something?
No, I was just apologizing to the group. I started the recording a little late, but you will have the recording of what we did get.
Okay. And hopefully, to a lot of the questions that were asked and the answers that were shared will help those individuals that were not here tonight to get some of their questions or their information that they would have wanted to ask. That will give them some insights as well as we're sharing, obviously, the link to connect with us after. So just some of you may actually still be working to build your credit and improve it, which is what we expect that may be the case for some individuals on tonight. But of course, I know that many of you are on tonight and you've been doing really well in terms of you've managed your credit, or you may have improved it over time, or you may have already had just success in doing it yourself through counseling from friends and family, or other mortgage brokers that you may have worked with, or the bank. But if you haven't had that and you know of someone that can, or you can, please plug in. Our offer tonight too is that we've seen a lot of individuals needing the coaching and guidance, not just for credit, but for just putting together the purchase, their first purchase. And so we offer a real estate coaching course, and we would love to hear more from some of you who would like to join us in that. We offer an info session that is up and coming next Thursday to get more information on real estate investing so that you can along with fixing and having the right credit and income, we can help you then get the necessary tools and knowledge that you need to make that first purchase. And we've got our superpower here tonight, Siobhan, who will be able to help you, because we don't always feel that it's necessary to just go to your bank that you work with to get that approval. It makes more sense to have the guidance and coaching of someone like Siobhan, who can assess and look at who you are right now and where you need to be, and get you on track to be approved, so that when you go to the lender and we look at everything and we bring it to them, they will approve you for that mortgage that you need. So Kemba, that's April 8th. Let's wrap up with just giving some contact information, because we know that you've been very patient with us, and thank you for staying. Our contact information is there. Siobhan shared it. We would love to have you follow us on Instagram, and of course tag us in any information that you feel that could be valuable to ourselves and or our community. That's Keen on You. Our website is Keen Group. So that's Keen with Kean group.ca, and our phone number is 647-370-5326. Our email is also there. We'd love to hear from you any which way. I know that we've answered a lot of questions tonight, but for sure after you leave you might remember or think of something else that you'd like to ask us, and you can reach us at Andrea@keengroup.ca or Kemba@keengroup.ca. And we'd love to interact with you further beyond tonight. It's Easter. Happy Easter, everyone that do celebrate, and enjoy the Easter weekend. I know that it's not necessarily going to be as celebratory as it would have been maybe 2 years ago. But, hopefully you'll still be able to enjoy some time off with your family, and hopefully, the coming months will see us past this COVID time, because I know we're going into a lockdown, and that's not exciting, but it is exciting to have a 3 or 4 day weekend. Thank you, everyone. Thank you, Siobhan. You did a phenomenal job, as we knew you would.
Yes,
and thanks everyone for joining us.
Good job. Amazing.
Yay. We loved that. It was awesome. Thanks, everyone. Good night.
Good night. Happy Easter.
Happy Easter. Take care. Good night, Siobhan. We'll be in touch.
We'll talk soon. Okay, bye-bye.
Okay. Take care. Good night. I just saw someone's beautiful face there. Awesome.